IT Pro TV, an easy, entertaining approach to online IT training. Stream over 2,000 hours of up-to-date, high-quality video content live and on demand. For a free 7-day trial and for a limited time, get 50% off a monthly membership for the lifetime of your active subscription. Visit itpro.tv/startup security and use the code SS50. Do you have a website, an external presence, employees, an office? Any of these things can be compromised and attacked. How are you defending these assets? Have you penetration tested these public assets? Start 2017 by taking a proactive approach to securing your vulnerable areas. Black Hills Information Security has been helping companies find their weaknesses since 2008. Email consulting@blackhillsinfosec.com and see how they can help you sleep better at night. Welcome back, everyone, to Startup Security Weekly. Quick announcement, the 10th anniversary edition of Source Boston is being held this April, including training sessions on April 24th through the 25th, conference talks 26th through the 27th, featuring awesome speakers from the security community.
Including
myself and Jeff Mann. How about that? And we will be at Source doing hacker movie trivia.
Except for I won't be there.
You won't? Oh, no, you won't be there. You'll be there this weekend at B-Sides.
Yes.
Not at Source.
Not at Source.
But I'll be at Source, and the Security Weekly crew will be at Source.
But you are an awesome speaker.
Thank you. Thank you. You are too, Jeff. We're going to hug after. It's going to be awesome. So events are going to take place in Boston.
We're having a moment.
In Boston at the Courtyard Marriott downtown. And Security Weekly listeners get a $100 discount on either the training or conference passes. By using the code Security Weekly, you can go to sourceconference.com. Make sure you put the R when you go to the URL for more information. And as I said, we'll be there doing hacker trivia and interviews in our booth in the vendor area. So
fun. I wish I was there.
I'm excited about our... Well, you'll get to see our setup tomorrow.
Yes.
At B-Sides Boston. It's a lot of fun. It's a lot of fun. We have an all-new event strategy, and it's going even better than I expected. Like, I don't know. Like, Michael, we've talked about this. Like, you just do something, and then you're like, wow, that's, like, really awesome for so many reasons, and you don't really recognize the value until you do something.
I'll throw some life wisdom on you, Paul.
Yeah.
If you have no expectations, you're never disappointed.
That's right. Well, also, I think and where was I seeing this? I was watching Jason Blanchard give a talk, not in security, and it's kind of funny because he's like, I work with hackers now, and he was explaining that to non-security people, and he did a great job. But he was like, everyone who thinks they're smart, raise their hand. And like everyone raised their hand. And he's like, in life, and I think in business, like, don't always do what's smart, maybe do what's wise, and those are two different things. So, like, the smart thing to do is, like, save money and, like, do these other things, but maybe the wise thing to do is to take a risk. And I think that's a lot of times in startups, a lot of the things we talk about, Michael, definitely overlap with Jason's knowledge and wisdom.
Yeah, the smart thing to do is never get out of bed, never leave your house.
Right,
and, hide under the covers.
I think what you're seeing too with your strategy is kind of twofold, right? Try it, and then you can iterate. So what we did at InfoSec World was impressive, and you're going to keep learning from that. But it's get out and talk to people. And the thing I've found is it's easy in the startup land to kind of sit in your office and look at your whiteboard or your code or whatever and be like, all right, am I doing this right? I should tweak this. In fairness, it feels very big to us. But the world's like, I'm sorry, what are you doing again? That doesn't even matter to me. But when you do something, sometimes anything, but make a calculated risk, you go figure out the piece that kind of fits, and then that gives you to the next. And that's a lot what I talk about the best next step. It's not the next best step. That means it's not the best step. Take your best step next, but it doesn't have to be big. You're not trying to solve the problems of the world or boil the ocean. What next gets you closest to your goal? That's your best next step. Take it. Go. Quick. Learn. Do it again.
It reminds me, before video games, there was these things called pinball machines.
Yes.
And my favorite pinball machine that I learned on, in fact, my mentor at NSA taught me how to play pinball. My favorite machine was one called Cyclone, and one of the things that it says to you is, because it's a carnival, it says, you pay your money, you take your chances. And that's kind of what we're saying here.
Absolutely.
Yeah. No, it works out.
Yep. So truth or victory?
Yeah, here's why I like this. I didn't like everything about this, but here's what I wanted to point out, because I liked where it started. In meetings where there's a debate or decision that must be made, I'm tempted to win at all costs. And I see that a lot. A lot of us go into meetings And we very much put right out there, this is the way to do it. And then we're in defensive mode. And everything everybody else says, I want to quickly point out why that's wrong. It's inconsistent. You didn't understand. Or that could work maybe sometimes, but mine is better. And this person's admitting, okay, you know what? In fact, this is what I really liked. And I think what I tweeted out, this is not a good process for the best decision. No, it's a pretty horrible process. And in the event you're listening there right now, and you go, no, Michael, it's a great process. It's sword sharpens sword. No, it's not. This is how you shut down voices. This is how you get into groupthink. This is how you make decisions based on symptoms and solutions fitting problems as opposed to understanding the problem and getting to it. So here's what he did. He said, all right, I want to search for truth rather than victory. The way I always say this is, I don't care if I am right. I'd rather get to what is right. And there's a caveat to that. What is right does change. What's right is in the moment. It's either based on who's there or the context or the nuances of the situation or what's right for today. You might get 6 months down the road and say, yeah, it's no longer the right decision, and that's okay. He had a couple things I like, though. So here's his advice. Work with the hood up. So this is, I would say this is open and transparent. Don't hide it. I mean, if you're working through a thought, tell people what you're working through. Tell them why. Tell them how. Show your work. Yeah. In fact, I like this. This was really good advice. He said, I'm quoting from his article, when I articulate a position, I will spend 10 times more effort to be clear about how I arrived there when I arrived than where I ended up. Yeah, that's actually really key, right? This is, again, what I pointed to is that's nuance. We spend so much time, and we'll see this a lot of times in marketing. Somebody's in marketing, they've spent time, they've put it together, they've agonized over it, they've worked on it, they poured hours into it, and now I've got it. The slide deck is complete, the messaging is good, whatever it is. And I give it to somebody else with the expectation that they're going to be able to deliver it, and they know none of that nuance. They know none of the decision needs. They've been through none of that process. They only have the final result. And they look at it and go, well, why didn't you do X? And they go out with it, and we've all seen this. Well, I mean, I've got this slide deck here, and why don't we just have a conversation? I don't know what any of this means anyway. And we kind of go about it. When you show your work, you're giving people an insight to what you're thinking. And I thought that was helpful. The rest of this is interesting. But basically what it comes down to is when you enter into these things, for me, it's more about mindset. Are you trying to win and be right at all costs? Because, I'm the leader, I'm the whatever, I got to be right. Or are you willing to say, okay, let's go figure it out. Let's come to some place together. I favor that second one, right? That's that truth over victory. So I liked it, but I don't know. What do you guys think?
I think when I worked for the university, I had this strategy that I developed largely because it stemmed from, and I'm curious to get Michael and Jeff's take on this. It stemmed from, I would go in a meeting, I would talk about security, and everyone in the room would tell me why that wouldn't work, right? And that was frustrating. So the strategy that I developed was I didn't quit. I had the meeting before the meeting took place. I would go to every single individual and I would say, hey, what do you think about this idea? And then hear what they came back. And then I would do things like, well, here's how I, the value of this solution, and here's how I came to the conclusion about the value of this solution, and hear their negative comments before the meeting happened and try and get them on board. Mm-hmm. And I would do that with every single person who would attend the meeting. And then once we had the meeting, I would get people on board. Now, it's kind of a sneaky strategy, sort of. I don't think it was the best strategy, but I had to find a solution to
It was a strategic strategy.
It was a strategic strategy. But are there better strategies for communication? And this is a situation that many of us are still in today, trying to sell security in our organization.
Right. I think of the many group situations I've been in over the years, and one example sticks out where I used to be part of an advisory board for a church I attended many years ago, where we'd have great discussions, but at the end of the day, everybody looked to the head person, who happened to be the pastor, and what he said went. And it happened so many times where I got to the point where, like, why do we even bother having this meeting? Why don't we just find out what the guy thinks and we'll just go ahead and do it?
Right.
And I've also seen that in a business context where even though ideas are put out there, and this is a business, somebody's got to make the decision. It's usually the head guy, but tying that back to this article that we were talking about, if you're going into an organization or a meeting and your attitude is you want to win, what that tells me from a communication dynamic standpoint is you're not listening, because you're even in conversation.
What'd you say, Jeff?
Exactly. because you're waiting to get your 2 cents in, you're waiting to insert what you think is right. So you're not even listening to what the other people are saying because you're just waiting for the pause to jump in and say what the truth is and what things are going to be. So it's sort of the unwritten or the in between the lines of this article is an important part of this whole process is learning to listen and letting people present their ideas, which actually, going back to your new booth and your new concept of doing interviews on the spot, there's a lot of people out there with a lot of great ideas that don't have the opportunity to speak up. You're giving them a platform, you're giving them an opportunity, and not everybody's going to come up with a great idea, but you're giving an opportunity for people to say something and contribute and be a part of the greater cause of security, if you will. That's my impression.
And in terms of that approach, Paul, there's nothing wrong with it. That's not sneaky. It's extra effort. What you demonstrated is that you were willing to do the extra effort, and then right. So when we look at Straight Talk, we look at translating value. You basically went to each person individually, and you probably, without paying attention to it, translated into what you thought was value for them, and then they would either explicitly explain why it wasn't or whatever else. But by doing that in advance of the meeting, you took a lot of the unknowns out of the situation. And it's less likely that since everybody already had a chance to vocalize with you and think about it and process it, that by the time they came to the meeting, they're less likely to pounce. They may not have necessarily changed their position, but you might have.
Right.
By going to 6, 7, 8 people or however many the number was, you start to see where it's at. And then you can become more of a facilitator and less of a, here, let me tell you how it's going to be. I think it's a great strategy. I think it takes a lot of time. But what we always advise new security leaders, take time going and listening to people. Ask them how they do their jobs. Find out what's important to them. Because if you understand what's valuable to somebody else, then you'll start to see what's valuable to you. So I think that makes a lot of sense.
I think that's the component that I was missing back then was the question of how do I make your job easier? How do I make your job better?
Yep.
Well, and another dynamic that I thought of that sort of it's sort of what you were describing is what we used to call the parking lot discussions. After the meeting, everybody goes out and talks about, and that's where the real decisions are made, after the formal process is over. In a business context, it might be around the break room or the coffee pot.
The meeting happens before and after the meeting.
Yeah. And the meeting itself is a formality.
Yes.
But all the decision making and the aligning of people that are going to agree with you, that all takes place outside of the construct of the meeting.
And that's why we see so many of our colleagues today that they think that they get to the place where a decision's made, and they find out 2 or 3 days later, no, my bad, it wasn't.
Right.
And it's really frustrating, and it creates more friction, and that's stuff to think about. So let me take you to a different direction here.
Before you do that, let me add one final thought, though. Part of this strategy of finding the other people and the buy-in. It's interesting in corporations and in organizational settings, the key decision makers are not always the people you think they are. They're not always the people with the title. So part of the process is to learn the organizational structure and how it works and find out who the key players are that to be even more strategic. Find out the people that you want to have that sidebar discussion with before or after. That can be more strategic to get those few people that, they may not be the titled position, but they have influence for whatever reason. It could be many reasons. They're the people that you want to target.
Right.
Go ahead, Michael.
I think it's good advice. Paul, where do you want to go? You want to talk about closing investors? You want to talk about factions in your startup? But I think
I want to talk about Munity.
Mutiny. Let's talk about immunity.
Mutiny.
I like it.
Mutiny is what I meant to say in the beginning.
So
it's fine.
So here's why I selected this. I would use the words friction and alignment, but this is a long article, and it is filled with gems. This thing is solid. If you're running a team today, come to our show notes and grab this one on Mutiny or Munity, whatever you want. It's there.
I think I got it confused with immunity.
Yeah,
I thought you were saying impunity,
right. Or
and
impunity.
I was like, "What is?"
Well, you
that
should
word?
know better. I wouldn't use a word that big, Jeff.
That's true.
So here's what they said, and this is I think probably what points out a problem that can be particularly damaging to a fast-growing company but I would also argue a security team. And we're finding a lot of places that they're going from like, I'm working with a lot of teams that 3 years ago had 3 people, and now they've got 30, and they've got to get to 50, and they're trying to figure it all out. And so basically, it's this concept of a faction. Like if you have these factions, and so basically what it said is, okay, what's the difference between, to being a team and having factions? And it basically said, like you might have a 10-person team, and you've got 5 different factions, and it's because they have different interpretations, they have different philosophies. And if you're noticing that young and you don't squash it, then it just gets worse and worse and worse. So that's why I talk about friction and I talk about alignment. If you want to talk about factions, I think it works just as well here.
That was actually going, just to highlight that point, Michael, when I worked for the university, they had not done that to prevent the factions from being created. And a lot of the employees had worked there for 30 years. So talk about challenges and friction.
Right.
That was like the best example that I could think of when you just said that, Michael, was that was a really hard thing to overcome because it had been allowed to just factions be created. And not that it's a bad thing, but people get good at what they do things a certain way, and they become more reluctant to change the more time goes on. And in their minds, they're having success, and they probably are, in depending on the lens you're looking at that with. But the instance you want to change that, then it becomes extremely difficult in that example, and I think that's a really extreme case of that.
Here's the definition. It's a great definition. I define a faction as a subset of the company that starts to put its own priorities before the priorities of the company. Mm-hmm. It may form for a range of reasons. They've got a particular axe to grind with a colleague, a specific goal they believe is more critical than a current priority. By the way, highlight that one. I think we see that a lot in security right now. A distinct way they want to do the work that becomes more important than building a great business. You got that? You've got a faction. But then, and this is what also it kind of trips some triggers for me. If your team is no longer working together toward a shared vision for the company, there you go. That's what it comes down to.
It is. It's definitely a leadership thing.
Well,
the leadership
sometimes it's a lack of awareness of what the goal is of the company. And
that's the job of a leader.
Absolutely,
is to make sure you communicate that at all times.
And test it, right, and make sure that we're there. And it's like in Paul, I'll share this with you before we share it with other people. But when we do the value prop audit, that's actually something that we start testing for, and it's one of those cringeworthy things where a lot of people say, "Ooh," right? If you ask 2 different people on the team, what's the value of the team? What's the problem that you're solving? What's the purpose of the team? And you get 2 completely different answers. That's a sign you need to go deal with that quicker rather than later. And we see this happen a lot because we will be at odds with what we think, right? 'Cause that's all about priority. It's interesting. I've started to realize that your value prop is your guiding star. If you're at the worst, you're a security team, you're a vendor, it's just a product, you're a product team. What's the value? What's the problem you're trying to solve? What's the value you create solving that problem? What's your impact on communication? Those 3 things make up your value prop. And if you understand what that is, that guides it. If you don't, you're going to degrade into factions because everybody's going to form their own. And I don't want to say there's nothing wrong. There's a lot wrong with that. That's kind of the way it goes. So here's what they talked about. And I'll just go through the high level stuff. There's a lot of goodness in it. Talks about hiring, right? Hire the right people. But what I thought was kind of interesting here, and I actually like this distinction very much. They say, stop this cultural fit thing. They said, stop, knock it off. What you're looking for is a values fit. Do they share the same values as you? Yep. I think that's a really important way to take a look at it.
Absolutely.
But what are the values? They need to be defined and understood.
Completely agree.
And what is a right person? What is the
Well, it's the difference of the left person, but that's the nuance in all this type of stuff that Jeff just pointed out is that. So we'll say, cool, values fit. And when you hear that, you then need to say, cool. So what are our values? What can we articulate? Our 5 most important values. Mm-hmm. If you can't, you need to be able to do that. And then does everybody share it? And that's where a lot of these things, this is where our friction sets in right here. We don't know how to distinguish those things. We're afraid to distill those things, and we're afraid that what makes us unique might not be accepted by everybody else. And we don't know how to blend our uniqueness into collective value. And that's where we have a lot of opportunities to do stuff differently. So I talked about hiring, and they have a couple really good ideas here to figure it out. One of the ones I'm going to put together is ask them about cross-disciplinary teamwork. Now, what's interesting is this person, so I would probably get along with them really well. They're passionate about cross-disciplinary teams. Turns out I am too, and I looked over my career. That's where I end up having a lot of success. Security is important, but you've got to integrate security with 2-3 other teams. That's where a lot of the friction comes in, because now it's not just how do I translate my value, and I don't understand your jargon, but you can say that from any position on the table. So when you're hiring somebody, I want to know how do you handle it? Are you a translator? Or are you a listener? Right? It's all the stuff we just talked about. Are you trying to win every battle by being the right person and the smartest in the room, or are you willing to ask the right questions and figure that out? So I think that's kind of useful. They talk about onboarding and some different ways to do onboarding. But and they gave good examples. One of the things I really like, though, is talking about team transfers. I think this is great. There was a scene in the movie. It's vaguely related to this. We Were Soldiers Once, like where he's practicing landings in a hot LZ, and he realizes that if the officer gets shot coming off the helicopter, everybody's kind of lost. And so he says, "All right, here's the deal. If you're below, you're going to learn the job of the man above you, but you're going to teach your job to the man below you." Now they said, "Man, it was military at the time," but I think that's a fantastic idea in an organization to be able to cross train. And what this is saying is, yeah, you know what? Let people be able to move around. Let them expressly say, if you're part of our team, part of our company, you can go to any other team. I would rather keep you in-house than not. The reason I'm focusing on this one so much for those factions, Paul, you mentioned it. I've been here for 30 years. We've always done it this way. I've got my little kingdom. You get rid of some of those kingdoms. But the other thing is, a lot of times we find somebody who's good at a particular job we need solved, and we pin them and hem them into that position, and they can't leave. And so they leave because there's nothing else they can do. You want smart people that are willing to do what's good for the company. Let them go understand how the company actually operates.
And they leave. I think this is generally true, given the personalities of many people that enter into this industry, especially the bright, smart ones. They leave primarily because they're bored. And that might manifest itself in they're not paying me enough, they're not giving me opportunities, but it basically boils down to boredom. They're, okay, I've done this. I want to, and you hired them because they were bright and creative and problem solvers, but you don't give them a new problem to solve. I mean, that's how I am. I mean, I got bored after many years of going to the same company over and over again because I knew what their problems were and we'd fixed them or not. One of the things that I like about consulting is I always go to a new company, and
fresh opportunity.
It's fresh opportunities. And while the fundamental security problems are the same, what's different are personalities, corporate culture, the inner workings of how things function or don't. And to use the language of this article, it's discovering the friction in the factions. I was even thinking a recent experience I had at a previous employer makes me wonder if, and I'm wondering if you'd agree with this or not, sometimes the factions and frictions can be down to individuals. And what I saw manifest itself in a previous employer was something about the corporate culture got to the point where people were afraid to be innovative and creative and do things different. They were worried about keeping their job, frankly, and so they were only doing what they were hired to do. They were only doing what the job description was, frustrated to no end because they saw opportunities if only they were allowed to innovate and try new things. But the culture was not allowing them to do that. I think that is a friction. But it's almost it's a collective one-on-one type of friction, if that makes sense.
No, I think you're right. No, I think I've seen it even in smaller teams and smaller startups where you've got two really powerful people at odds with each other, and that kind of forces people to either take sides or have nothing to do with it. So it's exactly what you've described, and then culturally that kind of gets set in, and people walk on eggshells. They don't verse their thoughts or what have you. Now, I've got a question for Paul. Paul, if you look at section 4, it's talking about technology selection. And what it's saying is you can argue, right, Emacs versus VI, Trello versus Asana, Java versus Scala, or whatever. And it said, look, most of us go, hey, whatever, do your job, get your job done. We don't really care. And this is saying, no, actually, this is different. That you do need to resolve that. That's not just a difference of opinion. That actually there's a different question at play. This is stuff you deal with. How do you see that? The choice of your underlying technology relative to your culture, your factions, and how you scale as a team.
Yeah, I think it depends on which technology you're choosing. If it's a technology that fosters communication or workflow within a team or between teams, yeah, absolutely, you have to define that technology. If it's something that is more an individual thing, like Emacs versus VI, that's more of an individual choice, right? There's no communications, there's no teamwork associated with Emacs or VI. Now, I will say, if you do standardize on an editor like that or some kind of software that people in your organization are using on an individual level, the training and knowledge transfer between people on the team is a fantastic thing to have. However, I think that's trumped by the ability of an individual to use a tool better than any other tool and be more productive is greater, right, than the value you get from transfer. And what you'll find is that'll happen organically, right? Like, I've worked on programming teams, and if one developer finds a tool and they're like, wow, this is really awesome, they start telling everyone else about it, pretty soon, like, a standard develops without you really having to do anything, just as a result of the culture that you have, and that's great. But when we talk about the tools that allow for communications, I agree, you have to step in and say, no, this is what we're going to standardize on.
I like it. Makes sense. It's a good article. There's a lot there, a lot to think about. And the bottom line is, if you have less factions, you'll have less friction. Mm-hmm. I think that can be true. Well, actually, that's a true statement. You can still have a lot of friction without factions, but that's an article I guess I'll have to go write, and we'll talk about it soon. I want to talk about this investors one. There's some stuff here that I think is absolutely brilliant, and I kind of wanted to point it out. I had not previously followed Elizabeth Yin. I do now. Her writing is good. I really enjoy her writing on a lot of stuff. So this one was about how to close investors. And what she's basically pointing out is, despite what you think, you haven't closed your round unless you've got a lot more people that you think are willing to invest in you than the round that you actually need. So this is one of those things we've talked about. And you and I tested this out on the show floor. I'd say, okay, well, so your round is open. How much are you shooting for? And we were pretty candid with each other. I don't know if people were a little cagey about that answer because they didn't know why. It's not a standard show floor question. But what I found was, if you're raising money, you should have a defined amount. You should know what you're asking for and why. We've talked about the risks of asking for too much. The risks of asking for too little are also pretty equal. You kind of need to know what you're doing. And let's bring up Shark Tank, so it's a complete program. Somebody says, oh, I'm raising X. And Mark Cuban's almost always a guy saying, and if I give you that money, what are you going to do with it? Mm-hmm. What's the money going to go toward? And so basically the idea here is, if you've got a round, seed or any, all right, A, B, C, what are you asking for? What's in the round? What's the valuation? And why do you need the money for? What are you going to use it for? Because that's what's going to help an investor understand how much risk you are as an investment versus whether you're a good choice or not. So what I thought's interesting is, she said, okay, here's a couple signals, right? For the VCs, you've had at least a couple meetings with the firm, including the decision maker or the decision makers. And you've discussed the details of the round, how much you're raising, what's the money for, potential valuation, potential terms of the round. And I thought this was pretty interesting. If you're talking to angels about your company, they may not even realize you are trying to raise money from them unless you explicitly mention the round. And I got to tell you, I think that's a mistake people make frequently. Now, here's the other part that I thought, and I thought it was interesting because the dollar amount seemed lower than I expected. So the pipeline value for a serious investor, right, your group, the people that you're talking to, should be 2x the dollar amount you're looking for. So if you're trying to do a $500K seed round, you need to have talked to enough investors that if they all came in, they'd have $1 million, right? So you're oversold. It's more than you can take on. And that may mean you have to close people out of the round or whatnot. But I think what she's saying here more bluntly is, not everybody's going to go with you. Now, I would have said 3x, right? If you look at sales, there's a general thumb that says you're going to win a third, you're going to lose a third, you're battling for the middle third. Now, that third you're going to win, that's not automatic. That's not because you were there. It's just like, if you do your best and you get out there. And I talked to a lot of people who think that If you've got a really well-crafted value proposition and you're solving a great problem in the right niche, you should close higher than that. Great, that's awesome. But so 2x, 3x. So then it said, so here's some things you need to do to create urgency. Now this is why I thought it was interesting. Urgency matters everywhere. And I'm personally tired of fake urgency. I see it all the time on internet marketing, and it's always like, Michael, these are the emails, right? I've got a secret. I've got too many people, so I can only keep this open for 6 more hours. Are you in or are you out? I'm out, dude. Thanks for trying that, though. Now, the reason people try that is because urgency works. That's fake urgency, right? That's false scarcity. That kind of crap drives me nuts. But here's what they said. Look, you're going to have a firm deadline, and you're going to have to commit to that deadline. I'm going to keep the round open for this amount of time. So it has to be reasonable, and you have to, and you've got to stick to it. You need to tell the investors how much money is in your investor pipeline. So you're trying to raise $500,000. You need to say, all right, well, I've talked to 5 people. And if I were to raise from everybody, it'd be $2.5 million. So I'm really only looking for $500,000. And what you're doing is you're essentially creating some competition for them. And so if they're serious about it and they know that the deadline's coming up and they want to get in, they like what you've said, it's great. Now, by the way, if you've done a crappy job of explaining what you're going to do with the money or what you do or the problem you solve or the marketability or anything else, they don't care. Scarcity is not going to matter to them, right? So this is all assuming they actually like what you're saying. They've given you positive signals back that they think you're worth investing in. Now, this is the other one. Tell all the potential VCs about where your conversations stand with the other VCs. I think it's a brilliant idea. And it comes with a really big warning. Just don't tell them which VCs you're actually talking with. Chances are they know each other. And if they don't, they have no problems picking up the phone and calling each other. And that's how you get yourself screwed. Either your valuation gets tanked or they'll I'll use the word collude against you. It may not be that nefarious, but they'll kind of work against you at that particular level. So basically what she's saying is, if you've got somebody who's serious, as long as you've got a deadline and you're upfront with them about everybody you're talking to, you're creating an opportunity for somebody to get in the game or get out of the game. And I see a lot of places where that works, where somebody, and take it out of just investing, anything. Look, I can only work with X number of people. This is the opportunity. This is what we can do. And so I thought it was really good advice.
I want to talk about starting a startup in a crowded market.
Yeah, I think it's great. So one of the things that always came around, and I'm going to paraphrase some stuff going into it, but a lot of people have said, oh, I've got this unique idea. There's nobody else doing it. If somebody tells me they've got a unique idea and nobody else is doing it, then my first question is, should you be doing it? I mean, like, did you legitimately come up with something that nobody else has thought of because you happened to come up with the idea, or you figured out a way to solve a problem that people didn't think was solvable? Oh, rock it, then run with it. But a lot of times that means there's no money in it. It's not profitable. It's not a good idea. And so here's the other part to that too. It might be a great idea, but then do you have the capitalization and the discipline to educate the market and carry that headwind forward for people and make it all make sense and get them to understand it? Well, that's really tough too. The other option is you go figure out a category where you can be really competitive. So it's a crowded market. In fact, and I think what this is arguing is there's a lot of competitors. So you have competition. You don't have to be intimidated by them. And that means the price isn't going to be the biggest factor. Like, it doesn't mean that if it's a crowded market, it's going to drop to commodity. What it means is, if it's a crowded market, it means that there's money to be made there. It means that the market is available.
There's demand.
Now your opportunity is, how do you differentiate yourself? How do you create more value solving that problem? And I actually think that's a great opportunity. In this book, Play Bigger, and I know we've got somebody that we're talking to about coming on board who has experience in category design. One of the points is, like, you can create your category, and if you're the category king, you're going to crush it. But you can also create the category and not be the category king. Or it said you can also enter somebody else's category and become the category king.
Be a category within a category.
Yeah. So I thought it was interesting because people are like, we get this a lot when people try to write, I'd write a book on it, but everybody else has written a book on it too. So, mine won't stand out. Well, with that attitude, it probably won't. But you're the only one who can write your book. You're the only one who can put it that way, and it will work for somebody. So just because somebody else has written a book, I've even had people look at it, oh, you wrote an article like that, I can't write one. First thing I would say is go write it. I'd love to see what you come up with, especially if it's different. You know what, even if it's the same.
Well, I
it's
think
cool.
I think the strategy, especially in the context of a crowded market, is to build a culture around your product. And I think when you look at examples of people that have done that successfully, authors, for example, right? I mean, there's a lot of science fiction authors, but they're ones that stick out in my mind because they've created a culture around it, and reached out to other people that can help them build that culture as well. And I think the burger bar example or whatever, if you created a culture around like a really cool burger, like you're going to be successful. I also think you have to be really good with marketing.
If the only sure way of failure is to not attempt it.
Right. Correct.
Whatever it is.
So I think that, so even, and what we talked about before, you're trying to serve the SMB community. You may have the idea that becomes the global brand, but you might also be the person who says, you know what, I want to live and work in my community and make a difference. And this is how I can do it. And there's nothing wrong with that. It can be crowded, but you don't need to solve all the problems of the world in order to make it work. I think those are your options. So this other one, let me just summarize it up real quick. The entrepreneurs must balance specialization with general knowledge. The point is basically saying if you want to be good as an entrepreneur, you have to be somewhat of a generalist, but you also still have to be a specialist. I know that seems paradoxical, but the point is at some point in your career, you had to have dabbled in a bunch of different things and been exposed to different things to figure them out. Because then when you're an entrepreneur, you have to go focus on your specialty really well. But these other things are going to crop up, and you either have to understand how to interrelate with them or handle them or deal with them or delegate them. And if you don't have that experience, you tend to get caught off guard with it. So, there's a lot more detail in it. The headline, I think, that caught my attention with this was something along the lines of like, this is the DNA. This is what it takes to be a successful entrepreneur. But just boiling it down, basically, you have to be a generalist who is also a specialist.
Well, and not to oversimplify, but I think the key word there is balance.
Yeah.
And that means different things at different times. But you don't need to know everything about everything, but you should know somebody that knows everything about something.
It's good advice.
Did I say that right?
I think so.
I said that right.
I like it. So,
news of the week.
Yes. I was just going to
Silence.
say, I was making sure we covered the stories we wanted to cover. So,
So
silence, interesting.
It was a busy week, and I threw some different stuff in there. And Paul, the one on Comcast is a question for you. I should have prepped you that. So, but I'm going to come to you with a question on that. Mm-hmm. Look, the silence thing is only interesting. I didn't want to ignore it. The stories are out, right? Silence is slashing its number of people. It had a horrible quarter. It's looking at a lot of stuff. I know people at Silence. I mean, I think in our industry, it'd be hard not to know people at Silence. I like them. I continue to struggle explaining what Silence does. Mm-hmm. And I think we might be seeing signs that Silence is struggling to explain what Silence does. Mm-hmm. And so I thought this was interesting. Of course, people leave companies. First employees leave companies. They get tired. They burn out. They feel, right, Jeff, what did you say? They solve the problems they set out to solve. Yeah. They look for whatever comes next. These are all valid. So I put this more on as just to say, I thought it was interesting. When the CTO of a unicorn leaves, I think it's interesting. And Silence has been making headlines. I mean, it was interesting, but I mean, they took on right around the RSA time, right? Them and CrowdStrike were going at it with the testing labs. And I frankly didn't read a lot about it because it didn't matter to me, but it kept making headlines. And now we're seeing these are not positive headlines. It's going to be great from a startup perspective to watch how Silence handles this. Mm-hmm. Let's see what happens to their evaluation. Let's see what happens to how they handle this and what happens in a quarter from now. Yeah, because one bad quarter is a bad quarter. But
this was a really bad quarter for a lot of reasons for Silence. Not only is their CTO left, there's things that have been published and disclosed. There are, and that's all I'll say about that. There is also a big layoff that happened, including some of my friends that no longer work at Silence that are looking for jobs. So there's obviously multiple things contributing to some of the pain that Silence, I think, is feeling right now. So. It remains to be seen whether they'll get their act together.
To you guys, I was thinking earlier, in terms of trying to make recommendations in the earlier segment for startups, trying to find the balance between selling the product, what it what your vision is, versus selling the concept for valuation and for investors. It's kind of two different things.
Absolutely.
Oh, it is.
Cylance, my lay impression and just seeing the splash that Cylance has made in industry events I've been to, I guess RSA most recently would be the big one, but seeing the name everywhere and just realizing how much money they pumped into the marketing and the branding over the last 6 to 9 months, which is great, I think, if you're trying to build the momentum for investment, but it doesn't necessarily scratch the itch of the buyer. I don't care if you're, we talked about, getting the brand recognition out like Barracuda, but like you said, what does Cylance do? What does Barracuda do? If I'm a buyer, why would I be looking at Cylance?
Well, I think there's a thing too, right? So I take about 2 or 3 briefings a week, and what I started to notice was as Cylance was coming out, a lot of people would say, what they're doing is great, but by the way, right, and Paul, I'll just keep it machine learning / AI / data science, however you want to parse it. You realize Symantec's going to catch up, and McAfee's going to catch up, and Trend Micro is going to catch up, right. And all the other ones who I probably should have also named, they'll catch up. So the challenge is always, are you doing something that's different and novel? Awesome, cool. So what problem are you solving? And then if I'm looking at it from an enterprise perspective, what's my cost to rip and replace versus the value that I get by going with you? And if you can't be airtight on that, then yeah, you're going to hit some friction. When we look at startups, they got a huge valuation, and that means they had to scale up fast. Anytime you scale up fast, that's always kind of interesting because you're typically going to get an absolute ton of friction in the process. Then with that much valuation, you have a tremendous amount of pressure on you to make it work in the marketplace. So Jeff, you're right. What you try to do to win over investors and get that high valuation may not be the messaging and the approach that's going to work in the trenches and in the enterprises. Right. And then you got to figure out your adopters. So are you going to go work at the enterprise level, or are you going to work through the mid-market to the SMBs in the mid-market by working with your valued partners in the channel? Okay, 2 very different strategies. And it creates a lot of friction and confusion in our industry. So now I've got to be able to go to people that have budget and say, hi, because they don't have unlimited budget. Here's the budget you need. And by the way, you should take that stuff out that's really not working and put in my stuff. And it sounds good, but how many people are actually able to do it? And I think that's what we're seeing. So it's been a rough quarter for them. And it may have been that they made some errors in calculation, and now they're going to course correct. So that's what I said. The next 90 days, even the next 2 quarters, are going to be the ones that help us kind of understand how they recalibrate and where they come out of this. So I'll keep working.
To Cylance's credit, though, I'm looking at their website, and they offer products and services, and they don't have the annoying pop-up.
They don't yet. You haven't. Well, it hasn't come up yet. I'm sure it will.
So you'd be okay with it. Yep. Tanium is IPO bound. Tanium also has been kind of interesting because they've had a number of big names leave the company in the last year or 2. But what I thought was really kind of fascinating, what caught my headline is it's a DreamWorks person that joined in a combo role. So it's like a CFO / COO role, which doesn't really exist. So I thought it was interesting. That's all I was pointing out it's because and what this really highlights is that what it takes to build a great company, and then what it takes to scale a great company, and then what it takes to IPO a great company. They're 3 different challenges, right? And I think it was Marshall Goldsmith wrote the book, What Got You Here May Not Get You There. Yeah, I mean, sometimes you got to change up a little bit. So this is an example of a company that kind of makes sense. Now, what's interesting is I had somebody reach out to me last week and say, hey, you guys haven't talked about Tanium yet. And I don't think that they're doing a great job with marketing. Jeff, that kind of goes to your point because they're focusing on IPO. But he said, I really like their technology. I think they're a solid solution. And then of course, 24 hours later, this pops up, and I was like, whoa, I got to put it down. But the question I had for you, Comcast. Comcast invests in Plume, a Wi-Fi wall plug startup. Yeah. And it doesn't have a ton of info here. No. But my first question is, they raised like $27.5 million to basically be a Wi-Fi network extender. So that's Linksys, D-Links, all these other, right, Buffalo Tech and all the other names I'm forgetting that are in this market space that are already selling these things. And I'm looking at it going, what am I missing? Why would somebody stick almost $30 million into a startup for a tech that already exists? And then I was curious, and maybe we could do it on a follow-up. Given your background with embedded devices systems and all the stuff you've done around this, do you see anything in this where you're like, finally someone paid attention and got it right? Or am I missing something here?
It's interesting. I think I had a more negative view on this. However, if I think about how they got their funding, I will speculate that when you go to the store, not us, not you, but when your average person not in technology goes to the store,
Consumer,
and they buy a Wi-Fi device and they put it in their house, and it's from one of the big brands because that's what was on sale. It's Linksys or D-Link or whatever, and they put it in their house, and time goes by and they realize like it doesn't cover the whole house. I have issues with it, and they don't want to rip it out and replace it because they're not technical. I have to call someone for that. I can go back to the store, and I'm not going to pick a Linksys or a D-Link, one of the big brands, because I had a bad experience with them, but I'm not going to rip it out. I'm going to go buy something else. And hey, look, my Wi-Fi works better. And when really they're solving the problem by selling someone something else, when the real solution to the problem is to rip out what you have and put in something that works in the first place, which is more money. However, if you calculate all the money you've spent so far on extenders and the access point, you probably could have just bought something that worked in the first place, but no one does. And there are millions of these devices already deployed that as time goes on and our computers get faster and the internet gets faster, they're falling down on their face. And this is a solution to that problem.
You know, I think what's interesting too is now that I'm thinking about it, and I apologize, I didn't do the prep. I can't remember the names, but there's a couple other companies that have come out in the last year that said, look, we make the process easy. You need a mesh network in your house. In fact, they maybe didn't even call it that. Buy our devices. They sync themselves up automatically, and you don't even have to worry about it. And I've actually watched a lot of our colleagues dive in and say, good, I'm tired of messing with this crap. Let's just make it work.
Yep.
And, you know thinking about with 4 kids, how many electronics devices, right? And I'm restricted. I'm a Luddite dad by most standards, and yet I didn't even count. But we have way too many devices already in the house.
It comes down to the number of radios, right? And the reason why, if you buy off the shelf stuff, they're not doing a mesh, and if they are, they're using the same radio to communicate between radios that they are to serve clients. What the extender does is you're just basically tacking on another radio. Had you bought the right Wi-Fi access solution, like the ones you mentioned, Michael, or something from Ubiquiti, right, it would have the proper number of radios in it already. And you would just go put it in your house. That's where it's not Arlo. There's a startup that does it's expensive, like $300 to $500 or whatever, but you just plug it all in and it works. It's because it's expensive because there's more than one radio in the system, and that's really the only way to get good Wi-Fi coverage is you have radios that are passing traffic between access points and a separate radio handling clients. That's all it is.
That makes sense. Now, I do think there's probably another player here too. Like somebody listed the other day, and I forgot who it was, but some company now, if you've got their internet, you have to use their router. Mm-hmm. And oh, by the way, they're using it to bolster public hotspots in public places.
Right.
And then you go look at the fact that Comcast is getting into it. Comcast for a while had SkyDog. They shut that down. Mm-hmm. So I could see where then they would throw money at this and say, okay, if this takes off, we want it. And then it wouldn't be a big hop for them to say, now included, when you buy us, we give you 2 plumes, right?
Exactly.
And they're getting them at a bargain price.
Exactly.
Okay.
Yep.
So I would be curious, maybe on one of our other programs, if we can look at the tech to see,
Sure.
Did they do the auto updating? Did they look at the firmware? Yeah, I know. Look, I'm trying to be optimistic. Just going to put this one out there, just industrial IoT security company, PAS, $40 million in funding to expand the go-to-market channel.
Aggressively expand.
Well, yeah, and if you can put aggressively in air quotes or single quotes, it's got to be serious. That's a ton of money. But again, what I thought was interesting is we're trying to build a channel. We're working on the channel. I'm paying a lot more attention to working on the channel, and I always think it's fascinating. There's a lot of friction. We incur a lot of friction trying to do the channel, and as we figure it out, so there's not a ton here. Again, they're an industrial IoT play, and they're going after the channel. It's just worth watching. Synac, they scored a C round, $21 million, $21.25 million. Here's what I thought was interesting. It was led by Microsoft Ventures, and HPE was in on it. and then Singtel Innovate was in on it, and then it had some other people that were in it. These are all huge names. I mean, the Google Ventures, which is now GGV Capital, Kleiner Perkins, Clopford & Byers. I mean, these are not small companies. So I just, again, like that's a big get for Cenac. So it'll be curious to see what they do with the money and how it turns out for them. But I thought that was good. And then this last little piece I just wanted to put in, Pandora. So look, I got to be fair. I have Apple, right? So I'm a Mac guy, and unlike you, I've not yet gotten out of it, and I'm kind of bought into the ecosystem. Don't know yet if I feel trapped or if I'm not a fanboy, but it works, and so I'm happy with it. So what's interesting is I have the Apple Radio, right? And in the family, some of us use it. I'm much more of a Pandora person. I dig it. It works for me. And Joff put up a playlist the other day. Freaking awesome, and I now have something new to kind of jam out to. So this came up, and I thought there can't possibly be an angle for us. Yeah, it is. It's talking all about private equity. It's talking all about all of these startups that don't IPO. So the VCs want to get out. Private equity comes in. Private equity buys it, and then it either consolidates it with others. It dumps money into it. It fixes management challenges. It fixes platform challenges, and then when the timing's right, they release it out there. And sometimes they make huge multiples. And so you look at it and you go, well, what's going on? In fact, it's got some stuff there that I didn't read into deeper, but I'm starting to. But what's kind of fascinating about it is with the examples, they're pretty solid. But what's interesting about it is it's about the VC want their exit. They want to get out. So they'll take the multiple that works for them, and they're out. So now their money can go into the next thing. Right? Let's go back to the point, Jeff. Their job isn't to sit there and hold and wait. They're happy to wait 5 years, up to 5 years. But if you can exit sooner, and now they get their money out of it, and they can put their money into whatever they think is next, that's exciting to them. And so it's just a whole nother dynamic and a whole nother dimension to this that we don't talk about a lot. And if we can find somebody from private equity to come and give us some insight, I think it'd be great. But I just wanted to point out, there's a lot of options for this stuff, and your exit could be acquisition, could be private equity, could be IPO, could be you get sold to other VC that have different tenures at different points. So I find it fun to try to figure out, but I just wanted to share that as an option.
What I don't like is it's Pandora and they don't support podcasts, so screw them.
I know, and so I feel bad. Then I feel ashamed that I like them so much, but I dig it. By the way, then just on that, there's a lot of speculation around whether Pandora can survive or not, and they've built a pretty interesting DNA to be able to serve up songs that people like, and I think that's probably why I like it, and I get to discover new stuff. It's possible we may see that they've got a fire sale coming up. Adam, I forgot who. One of the guys from Fortune was kind of writing about that the other day, so I was personally interested in it. I thought it was kind of cool. In terms of our journeys, because I know we're about the end of our time here.
Yeah, we're out of time.
Value Prop Audit, it's going really well. I know I'm going to bring you through it a little bit, and if anybody's listening and they want, just shoot me a note and tell me that you heard it on the program, and no charge. I'll bring you through it. Let's work through it, awesome. And I'll show you what it looks like. 15 points, and I've gotten a lot out of it, and I know other people have. So that created the need for a Value Prop workshop, and I'm actually in talks with a company where we're going to do that and make it public for people who want to do it. And the simple start, I've gotten some really good feedback. So I've been on that swing of things are kind of tightening up and making more sense, and I'm excited about it. So I'll look forward to it. How about you?
Cool. Readjusting the marketing strategy so that John and I are doing more evangelizing based on our open source product. Rather than the commercial one right now, while the commercial one's still got some pretty heavy development going on. So I'm excited about that because it means John and I just get to give talks and talk about how cool this concept is and give something away for free. So that works.
I love it.
I hope that works. That's what we're banking on.
And it was great having Jeff in the studio with us.
Absolutely. Thank you very much, Jeff.
Yeah, it was fun.
Thanks everyone for listening and watching Startup Security Weekly. We'll see everyone next time.